Come July 1, the cost of car insurance will go up for everyone here in Michigan as the state increases fees for catastrophic claims.
The rate increases come after the state's Catastrophic Claims Fund fell short by more than $3 billion last year. Now, all Michiganders with car insurance will have to pay the fee even if they choose no personal injury protection.
Joining us live in studio to discuss these changes and the impact, we welcome the founding partner of Christensen Law, Dave Christensen, as well as Doug Ware, the president and CEO of Doug Ware Insurance Agency. Thank you both so much for being here tonight. So let's just get in front of this here. What are the major change here? Is it the insurance company looking for a money grab, or is it really the state issue?
It's really the MCCA, the Catastrophic Claims Association, is trying to make up for some of the losses that they've experienced, like most of us have, in the market over the past year or so. The pile of money has shrunk, and so motorists have to make up the difference in those losses.
So everyone's going to be paying this fee one way or another now. Doug, maybe you can explain how much are people's bills going to go up? Exactly how much of a financial hit will this be for your average person?
Well, it could go up maybe, I don't know, 30%, probably somewhere in that ballpark area.
Dave, I want to kind of simplify this. Let's put this in layman's terms. For all of us who don't work in this industry, what exactly is the personal injury protection that you're getting? What kind of coverage is this? If you are in a serious accident, what happens?
If you're in a serious accident and you're injured in Michigan, for nearly 50 years we've had this no-fault system, and it has remained the same until just a couple of years ago when it was changed. It provides the best medical coverage of any insurance anywhere in America, better than Medicare, better than any other kind of insurance.
And that's whether the accident was your fault or not.
No matter whose fault the accident was, and that's been in place since 1974. A couple of years ago, the legislature changed the system significantly and allowed people to opt out of that. They can buy less coverage, or they can go with no coverage at all if they have Medicaid or some health insurance that will pay for auto accidents. So some people have opted out and they don't have this personal injury protection, which I don't recommend. But even those people who tried to save some money are now going to have to contribute to the MCCA system, which funds the personal injury protection. So it seems a little out of balance, but there is a statute that requires everybody in the state, whether they drive or not, to contribute when the MCCA, when their fund has shrunk below the numbers they need to be at.
And as a lawyer, do you have concerns that, okay, the rates are going to increase, that you're paying more to your insurance policy, but God forbid there's an accident and it's catastrophic, you may not get paid out properly from the insurance?
You may not get paid out. You will not get the care that you need. Most importantly, you'll end up on another system, Medicaid or something like that, if you have a lifelong catastrophic injury. It doesn't provide nearly the care that you get through no-fault coverage with your auto insurance companies. But as people who were trying to save some money, and these changes in the law were intended to save people money, it's kind of reversed that effect now because they're spending that money that they had hoped to save.
So to be clear, you both recommend that everyone should have that PIP coverage, correct?
Absolutely.
100%.
So now everyone's annual rate will go up $35 to about $48?
They're somewhere
Right around
in the
there?
ballpark.
Yes. Okay. All right. Thank you very much for explaining it to us the best you can. I think we've got a hold on it. This is David Christensen, founding partner of Christensen Law, and Doug Ware, president and CEO of Doug Ware Insurance Agency. Thank you both for joining us.